Okay, so good evening, everyone, and welcome. My name is Maulik Shah, and I'm one of the co-founder and CEO of Almus Risk Consulting. At Almus, we serve clients that are exposed to currency, commodity, and interest rate risk. And over the last 11 years, we would have served more than 400 plus clients. At Almus, we research, we aggregate knowledge from various sources, and our commitment is to spread this knowledge amongst the market participants. The monthly webisode series is our way of expressing our commitment. And what makes it possible is your interest, your enthusiasm, your presence on every single webisode. So thank you all very much and welcome to this season 2, episode 2 series of Almus Monthly Webisode. At Almus, I must say that we are also blessed with network of amazing friends, experts who are more than willing, kind enough to spend the time and energy and come on this platform, share their insights. I'm deeply, deeply grateful to all the past and the current speakers. And let me take this opportunity to welcome our today's speakers. We have Prithviraj Srinivas, Chief Economist from Mahindra Group. Welcome, Prithviraj.
Thank you,
Venkatraman, yes, the Chief Financial Officer, Maverick Systems Limited. Welcome, Venki.
Thank you, Malik. Happy to be here.
Jayesh H, co-founder, Juris Corp. Welcome, Jayesh.
Good evening, everyone. Thank you, Maulik.
And Dr. Abhay Sinha, Director General, Service Export Promotion Council. Welcome, Doctor.
Thank you, Mr. Malik.
Let me set first the background of today's session and then hand it over to the experts to do deep dive into the subject. Now, most of you know, as a market participants, India is traditionally a current account deficit country. And more we grow, it is kind of a worrisome for the regulator, for the government, for the central banker. Why? Because largely our growth is import dependent. There's a worry on current account deficit. Now, it is not a surprise, though it may be shocking, but it has been a conscious effort to work on this element over the last 2 to 3 years, and a combination of various factors. Thanks to first COVID, the trend of deglobalization, the China Plus strategy, the government conscious efforts through reforms like PLI schemes. Today, as we speak, definitely the current account deficit is not a worrisome in spite of we growing reasonably well. At 1% or less than 1% FY 23-24, we probably will be closing about $20 billion on a 3.5 plus trillion GDP. That's way less than 1%. And if I take out the gold import component, which is close to about $55 billion, we are actually current account surplus. Now, apart from the factors that I mentioned above, which has really contributed in curtailing the current account deficit, one, there is a significant factor which has really helped restrict the current account deficit, and that is a phenomenal growth in service exports. I think few months back, I attended a presentation by Prithvi, who was with us today on the platform, and he made a presentation. The growth in the service exports year after year, I think the last 3 years, FY 21 till date, we have grown about 20% odd. That's the growth on the gross level. And he talked about the way we are growing, we probably are very close to, at a gross level, the goods exports. Now, what has really made this possible? And then since that day, we've sort of, deep dived into the elements of service exports. And we found one very interesting element. Frankly, I did not know this till I found out a few months back. And I'm not sure, but it is GCC, Global Capability Center. And further, when we deep dived, it is really grown significantly over last couple of years, especially post-COVID. Now, what is this GCC, Global Capability Center? What is the emerging trend? All of that is really the topic of today's discussion. And that topic is inside of the overall theme that we talk about, the roadmap to current account surplus. Just for all the viewers, the participants, this theme of roadmap to current account surplus will be followed up in the next few webisode series by focusing on different exports. So today's topic is all about exporting India's services to the world. And within that, we're going to deep dive into the GCC. Now, what this new animal will look like. Experts will give their insights, their wisdom. But I must say that it is not an infant animal. It is much more mature. It is rather growing at a phenomenal pace. And more of it we will know in the follow-up session. We have speakers from various fields. We have an economist. We have a sector representative, CFO. We have an advocate solicitor who has done that in financial service space. And we have a trade promotion representative. So within this expertise, I'm sure you will get enough of the insights into this upcoming trend. Just on the logistics of this session, while we have kept it for 1.5 hours, given the depth of the subject, during the session, any point in time, if you have any questions, feel free to put it up to Q&A. Don't wait for the Q&A session in the end. I'll pick up your questions and place it to the speakers. Feel free to express your views, even that matters. And I'm sure you will have a great time ahead. So with that, let me first welcome the presenter on the subject. We have Prithvi, who's going to present on this service exports and GCC. And we will follow it up with a free-flowing conversation with the speakers. So Prithvi, over to you.
Thank you, Malik. Thank you, everyone. And first of all, I'd like to take this moment to thank you, for giving me this opportunity to be on this platform and speak to your clients, and also the honor of being part of this fairly, well-known guest lineup, right, and speaker lineup. So I'm sort of really thankful for that. What I'll do is, as any good economist, I tend to have this backup of a PowerPoint, right? It's sort of definitely a tool through which you can take the conversation. And I must say that I'm absolutely excited about GCCs as much as you are. And, I shared that excitement some time ago. So I'd like to probably share this presentation. I hope this is here. So just to give you a sense on what sort of trends we are seeing right now, and what is generally being spoken about by people like NASSCOM when it comes to outlook. You touched upon this quite briefly, but here we are, in terms of the goods trade deficit. Our goods trade deficit on a monthly basis is about $15 to $20 billion. Now, primarily when you dig into it, the deficit is because of us not having competitiveness when it comes to energy intensive imports, be it crude oil or coal, and things like edible oil, where, and of course gold also sort of becoming a big part of that import. Now, given that we are expected to see an investment upcycle over the next couple of years, I mean, this is the expectation from the market and from a broad range of participants. It's quite likely that we may still see a $15 to $20 billion per month trade deficit over the next couple of years as well, because investments tend to be a bit import intensive. Fortunately for us, while we are seeing $20 billion worth of goods trade deficit, the deficit, when you consider services as well, falls down quite rapidly to about $7 billion, between $5 to $7 billion per month. Now, largely driven by this cushion, that services surplus. So we are generating a services surplus of about $13 billion per month. Now that's negating the trade deficit that we are seeing on a monthly basis, right? A little bit more on the numbers. Pre-COVID, we were about $20 billion per month. Services exports, now that's moved up to about $30 billion per month, so a $10 billion per month addition. So $10 billion of additional money that's coming into the country. It's generating jobs, it's generating service, savings and capital that's available for other users within the country. Even in the case of goods exports as well, we have seen goods exports move up post-COVID. But given that our exports basket is primary commodities led to a large extent, it is sort of sensitive to prices. So be it crude oil or the rice exports or wheat exports and those sort of things, I mean, it can be quite volatile, right? Whereas when it comes to services exports, they tend to be a little bit more sticky. And so, which means that if you have gone from 20 to $30 billion, my sense is that it's possibly going to remain a little bit more sticky on a monthly basis, right? And the chart on your right-hand side gives you a sense on what is the size of this services exports relative to the economy. The last time this happened, where we were nearly 10% of GDP when it comes to services exports, this is quarterly terms, was between 2003, 4 up to 7, 8. So pre-global financial crisis. A very sharp run-up in services exports. This was your IT, ITES, BPO, call center, that revolution that sort of created jobs, that brought in money into the country, allowed some surpluses to build. So we are sort of in a very similar position at this point in time as well. So we have seen that services is driving a significant part of the economic activity at this point in time. If we have to dig down a little bit into services exports and into GCC, right? Specifically, the conversation is about GCC. Services exports went from about $215 billion 2019 annual basis to $338 billion 2023. So it's a $123 billion increase. So which means, like I said, about $10 billion per month, right? Additional money. And a lot of that is coming from your software and business services. Together, it's about $245 billion. And GCCs represent about $40 billion odd from this $245 billion annual exports, software as well as business services exports. And they employ about 1.5 million people, according to NASSCOM. And this number is expected to go up even further. So from $40 billion to about $80 billion, and employment from about 1.5 million to about 3.5 million. So the delta over the next couple of years that is expected is $40 billion of additional money, as well as $2 million of employment. And these jobs are meaningful jobs, right? They are high quality urban jobs and tend to have a much higher level of multiplier effect on the rest of the economy, as we will see in further slides. I'm borrowing some slides from NASSCOM just to give you a little bit of sense. So this is really the evolution. And Maulik, you mentioned that, this is not a new story. It is something that's maturing. And we can see that, over the last couple of decades, services exports in our country have definitely matured. It was initially about cost arbitrage, about talent arbitrage, but then it went into innovation. And now we are at a stage where multinational corporations are setting up businesses on their own in India and have multiple departments being based here. They're also, some of these, personnel here are senior personnel who are driving global roles. They're also driving innovation. They're part of the product, right? So you've sort of moved up the value curve, where today Indian GCCs are driving product and driving innovation for these multinational corporations. And some of these success stories are things like, engineering R&D, where you have automotive companies who are designing the latest EV cars for global firms out of India. And the next wave that NASSCOM sees is where these GCCs become transformation hubs, right? So what that means is there in this next slide, where they're really driving product and business as well. So they, from a cost setup, they start to become revenue generation setup. So really, you're sort of going full circle when it comes to that value curve and that maturity level. Most of these jobs and this activity is obviously centered around tier 1 cities. So Bangalore, Pune, Mumbai, NCR, Chennai, Hyderabad. But increasingly, we are also seeing that these GCCs are moving into tier 2 and tier 3 cities. So Ahmedabad, Baroda, Coimbatore, Jaipur, Cochin, Kolkata, etc. So you already have about 200 plus GCCs that are set up in these tier 2, tier 3 cities, and about 70,000 odd personnel working out of here. And this is, I mean, my sense is that if you were to add one person or one additional employee in a tier 1 city versus a tier 2 city, I would argue that the tier 2 city addition would have a much higher multiplier effect on the economy, right? Because you'd have malls or hotels, as well as hospitals and schools, etc., sort of moving towards where this employment is getting generated. And I would expect a much higher level of multiplier effect as you see this transition towards tier 2, tier 3 cities, as these GCCs hunt for talent in a broader spectrum of the country. It's already happening. It's just that the next 2 to 3 years are expected to get more exciting. So what does this represent? I mean, suddenly, how is it that India is sort of seeing such high levels of services exports? One reason, of course, the global post-COVID, because of digitization, etc., there's a much higher level of innovation and push towards digital services, and therefore India has naturally sort of fit into that paradigm. But apart from that, India is also gaining market share, right? Given the manner in which Indian GCCs performed during COVID, they were reliable, they provided innovation, and I think the trust that they built up with their global headquarters, I think that's pushed a lot of these businesses to set up their GCCs, expand their GCCs in India. The chart on your right-hand side, I mean, I kept talking about jobs. This is just a data point to give you evidence there. This is Naukri job postings. It's been indexed to 2011. And the number just represents the total number of outstanding job postings, right? That is currently being advertised on a monthly basis. And you can see between pre-COVID level to post-COVID level, there's a bit of a step shift in terms of job postings. It represents those 150 MNCs who have sort of come in to the country over the last few years and set up their GCCs here. So these were jobs in IT, ITES, banking, insurance, education. Yes, there's a little bit of a slowdown in the last year or so because of the funding concerns and geopolitical concerns. But if we think about the fundamentals are in place, right? The fundamentals are quite favorable. Indian GCCs are definitely maturing. They're moving up the value curve. And apart from that, you're also seeing that costs in wage costs in Western world has definitely moved up, right? The US has become a lot more expensive. The UK has become a lot more expensive, tight labor markets. So there is that push towards outsourcing, the push towards, sort of, you could say more economical talent pool is definitely going to be there over the next couple of years. I don't think people are coming into India, and I'm sure Venki will give you more details, not just for simply because it's cost arbitrage, but they're also sort of seeing talent and ability to drive innovation, and increasingly ability to drive business as well for them. Since our topic is about the current account and balance of payments, this is just a brief breakdown of the balance of payments. And if you could just focus on the highlight there, we will most likely, I mean, this is my estimate, it could go up and down by a few $1 billion. FY24, we will probably end up with about $240 billion in goods trade deficit. But if you look at services and transfers is remittances, and these are net numbers. So net of, services imports and net of, remittances outward as well. You will probably see that services and remittances together in FY24 will sort of surpass the goods trade deficit. So it's going to fully offset the goods trade deficit. And in a way, if you come to think about it, I mean, this is services and transfers represent India's investment in talent, India's investment in higher education, high quality education. It's either this high quality employees working for multinational firms in India, or onshore and sending their money back home, right? So the $266 billion that we earn on an annual basis is just representing that talent pool that's been developed over the last couple of decades. So the question is, I mean, does this mean we are poised to move into current account deficit? I think the answer is a bit more nuanced. So this chart has two details. One is the current account deficit, which is represented in the gray bar, and the second is the real effective exchange rate, which is basically the rupee in real terms, right? And against a basket, not just USD INR, but as a basket. And you can see that, I mean, typically when the real appreciates, you should see that the current account deficit widens, and we will see this between 2003 and 2011-12, right? And even between 2014 and 2019 as well. My sense is that at this point in time, probably the real effective exchange rate is neither overvalued or undervalued. It is probably at neutral levels, and the current account deficit is probably going to be maintained. So what I'm trying to tell you here, what I'm trying to convey here is that while we may have a services surplus at this point in time, it's a positive terms of trade shock. That surplus can quite easily, get wiped out by stronger imports, either because interest rates are maintained at a lower level and therefore you see a consumption binge, or you see that fiscal deficit is much higher and going into infrastructure investments or other spending which is import intensive, and therefore that imports go up. So the balancing factor in that sense is really your interest rates, it's your fiscal policy. And I'm quite happy to see that over the last 1 year you can see there's a lot of discipline. Policymakers have definitely learned from the past. Between 2004 and 6 and 7, when we saw that services exports boom and the money that it brought into the country, the surplus it generated, it of course led to a lot of investments into infrastructure, etc., which really did not see payback, right? I mean, the allocation was not good. The allocative efficiency was not there, and therefore it did not give you the returns. So now there's a lot more attention being paid there. The quality of the fiscal deficit is being maintained, is being improved. You can see that there's more focus on fiscal discipline, and you can see that the RBI, while its interest rates are not being increased, at the margin, it has already started to tighten risk metrics to make sure things don't go haywire this time around. So, near term, given the way policy is being handled and is being maintained, my sense is that we will most likely see a narrow current account deficit continue. But a bit more on the medium term, I would say that if we can raise the competitiveness on the manufacturing side, and if the investments that we're sort of putting into green hydrogen, etc., where we indigenize energy production, etc., I think if those factors play out, then I would say we are far more confident to sort of sustain a current account surplus. So improvement in competitiveness on manufacturing, on energy production, I think would be a key factor for us to sort of begin to discuss current account surplus. I will stop here and probably leave with just one thought. Maulik, we discussed this one term GCC, right? This acronym GCC. I think the other acronym, which is GVC, Global Value Chain, I think that's also going to become a little bit more important. So GCC and GVC are two terms that are probably going to enter into our discussion, enter into things that we discuss on policy, on markets, on risk for the next couple of years, in my view. And GVC is sort of how we are sort of fitting into the global value chain on electronics, for example. So if we can do the same for automobile components, if we can do the same thing for EV exports, etc., I think those would be game changers. So GCC we discussed today. I think GVC is the next discussion possibly for you. I'll stop here. Thank you.
Season 3, we will discuss GC. Excellent. But thank you so much, Prithvi. It was very, very insightful. I think the data speaks itself, and very interesting perspective that you shared. And I've just noted that down. That two numbers, reflects the India investment in high quality talent, both remittances. I mean, I never looked at remittances as the way you looked at it. It's the end of it, India's investment, the talent being onshore and offshore. That's really the distinction. But fantastic. I'm going to actually now go to the ground and understand what this GCC is all about. And I'm sure, I mean, what you have given is an economist perspective, the number, the impact, the multiplier effect. Let's hear from Venkatraman, someone who has been in this sector earlier in Wipro, now spearheading Maverick. You have seen ITS from a cost arbitrage center that Prithvi talked about. Now we are moving up the value chain, and we are now talking about GCC. What are the growth drivers, and what are you seeing it on the ground?
Sure. Thanks, Maulik, and thanks, Prithvi, for setting the context. I think is useful to kind of dive into IT services and GCCs and how it works. I think given that I've spent a lot of my time in the IT services industry, like as Maulik mentioned, Wipro, and then Accenture, Mindtree most recently. So I think I've seen a lot of this from the IT services perspective. But however, I think in each of these companies, we have worked closely with many of these GCCs and seen them evolve over the years. So I can kind of explain and give my perspective of how I've seen this change and why it is getting as much as attention as it is getting today. As Maulik mentioned earlier on, these have been there for a very long time. And particularly in the Maverick context, because we work for banking and financial services companies, in that context, GCCs, if you were to look at it, have been the banking GCCs have been the banks have been the early adopters and the early movers in India. If you look at some of the earliest GCCs in India have been Amex. Amex have been here for, I don't know, 30, 40 years or more, even more. So I think they've been early adopters in that sense. And since it's something which we focus on as a sector, it's interesting. But maybe I'll step back a little bit to just look at it from an IT services perspective, and then maybe dive in a little more on GCC. So if you look at the IT services industry, and particularly if you look at it in the last 15 years, and to me, while GCC have been growing and will become even larger, it's still a subset of the larger IT services overall basket, if you would call it one, because overall numbers in terms of services exports, even all of these numbers do get counted. But if you look at IT services in the last 15 years, they've gone through waves of growth, and they've also had their own challenges in terms of struggling with growth over different periods, right? 2008, you had the subprime crisis, and then and every time what you'd see is that the industry is adopted and been resilient to find ways of finding newer areas of growth, right? 2008 subprime crisis, then at the time cloud, RPA, and all of that was something which the industry was able to identify as an opportunity, and then created opportunities for themselves to find new waves of growth. 2017, I think, with all the kind of constraints or regulations, which geography-related regulations like tightening of the visa regimes, H-1B visa regime in the US, or Brexit, or even automation-related challenges, led to another way of low growth for the industry. And then how did the industry was able to overcome that by aggressively going in for local onboarding, getting more people in the US, and that kind of stuff was something which was focused. Similarly, I think with when the COVID pandemic hit, I think it was remarkable in terms of how all of these companies were able to quickly find a remote working model and then adopt them with the latest digital technologies, which helped them find a way of finding newer avenues of growth. So the point I'm making, and right now, of course, with the geopolitical uncertainties in the US, Europe, and of course in the larger Europe in terms of Ukraine and Russia and all of those aspects as well. So in each of these cases, the industry has been resilient and able to find growth, and it has also been applicable to the GCCs. But the way, if you look at each of these periods, I think the companies have faced low growth for at least 4 to 8 quarters before things have started to turn around. So I think we are also in that phase as we speak between 22, 23, and you would see that with the way the larger IT services companies have reported numbers for FY24 and the kind of messaging they were talking about for the coming year as well. So I think the growth expectations for FY24 is in the 3.3%. And similarly, in the coming year, the expectation, Everest is also talking about 2.2% kind of growth. So I think that's something which is likely to be the case, but I think there are pockets of growth where a lot of the smaller mid-sized companies are able to grow significantly faster than this because of the specific areas they're focusing on. Now coming to GCC, and I think Prithvi explained and gave a lot of interesting data points around how GCCs are poised for growth. But even within that, if I were to just focus on the subsegment of the BFSI GCCs, I think that's a significant number within that. And I think they've been growing at almost a CAGR of 6.5% in the last 10 years. So that's something which we focus on and we look at closely because we work with them closely as part of the work which we do in Maverick. And it's a significant chunk within that 1.6 million, which Prithvi also spoke about. Almost 300,000 of them are working in BFSI focused GCCs in the country. And Bangalore, as you all know, is the top employer for BFSI GCCs. Almost 25-30% of all GCCs in the country come out of Bangalore. I think that's the larger piece in terms of the numbers. But I think what is interesting to understand is, and I think Prithvi also put out a slide in terms of the nature of work, how it is rewarded. And that's something very, very interesting. I think if you look at, I think that's true even for the larger IT services industry as well, right? When the initial outsourcing wave happened, it was always cost and cost arbitrage, which was driving those decisions. Similarly, with GCCs as well, I think the initial wave of work which was adopted by GCCs were more cost driven versus now, I think slowly, I think it has moved up and now they're working on innovation, they're leveraging the partner ecosystem, which with the number of IT services companies in India, and then picking on a number of digital transformation work for their larger parents. So I think that's definitely driving a lot of traction. And also, I think the number of senior positions which are getting created here, which are all CXO level positions, which are senior folks who are either business line heads or function heads who are getting located out of India. So, and that number is significant. I think if you look at Deloitte's recent survey, they're saying there are almost like 5,000 global leadership roles which are going to be located out of India. I think that's a significant number. So that kind of tells us two things, right? How strategic this has become for these large GCCs and how important it is. And the fact that they're bringing in such senior positions, it is going to drive innovation and also related productivity and other gains which these companies would expect to see. So while that's the interesting part in terms of the traction this is seen, but there are 2-3 other aspects which we need to recognize is while these are all the good things about the GCCs, but if you look at the GCCs, their cost structure is a little higher. So because there are 2 reasons for that. If you look at the traditional IT services companies like ourselves or even the larger ones, all of us have a very, our pyramid structure is a little more broader and more efficient. So therefore, our average cost will be, so the average cost for a GCC is at least 20-25% higher than a typical IT services company. So when you look at cost to cost, their cost structure is going to be higher because their pyramid is not as efficient and will take time for them to build that pyramid on a comparable basis because the scale of these numbers are not large. So there are only few which are very, very large. But if you take them out, many of them are not that large. And there are very, very strategic reasons why they set up shop in India and therefore they will not be as large. But so that kind of drives one aspect in terms of cost. But equally, and all of these large GCCs, if you look at the parents, or even from India, they do outsource work to the Indian IT services companies. And since the Indian IT services companies would charge them a rate, which means they're charging them a marked up rate, that rate versus the SCOT, the rate of charge by the IT service companies could be at least 20-25% higher. So therefore, there is this inherent dichotomy, right? When you look at it, their costs are higher than the average IT services provider. But then if you look at the price they're paying to an outsourced Indian IT service provider who's working with these GCCs, the price they will pay will be a little higher. And therefore, it kind of brings a balance, or they need to strike a balance, because they need to strike a balance to justify and validate the reason why they've come to India and why they're doing what they're doing. And equally also balance another important element, because while they do have a lot of talent, the larger or the traditional IT services companies do have technical capability, which is very, very strong in specific areas, and particularly in the new age technology areas, they have very strong technical capabilities, which all of these GCCs would love to leverage. While they do bring in a lot of domain and other related competencies to the table, technology elements, while they do hire, and they're hiring a lot of them in the last few years, there is gap in certain areas, in certain levels of the organization, which they would need to leverage. So that balance needs to be there. So if you look at it, I think companies have taken multiple approaches within that. For example, if you take the insourcing versus the outsourcing ratios, it has varied, and it used to be almost 40-60, which means 40 insourced and 60% outsourced at a point in time. And then it moved significantly the other side. Companies went as high as 80-90%. But the general average, which is expected to stabilize in the medium to long term, is in the 70-30 range. Although there are some GCCs today talking of even 70% of the work being insourced to themselves. So it could be in that range. But I think 70-30 is what we see as a medium-term average where this is likely to stabilize. And equally, if you were to look at it from the other side to say that what percentage of work these GCCs are picking up from their global parents in terms of finance operations and related areas, the ideal mix is about 30-40%, but I think a number of them are doing much lower. It could be 5%, 10%, 15% thereabouts. There are a few who are doing very high, maybe 70-80% of the work is being done in India, but there are a few outliers there. But I think the average and the ideal average should be in the 30-40% range. So I think that's another element which I'm sure these GCCs would look to work on. And equally, I think what also happens, right? I think when you continue to do this, and because there is a lot of traction, because there is always the way the GCCs are viewed at, particularly when you're hiring a lot of talent and you're trying to scale, because there is going to be this efficiency or a lack of efficiency given the way the structures are going to be. There will be some points, maybe in the near future, where their pyramids can become a little more skewed, which again could lead to a little bit of a wave of again the other way around, where again more work will get outsourced to IT services companies, it can get stabilized, and then it'll come back to that cycle. So that cycle can play out a little bit. And maybe I'm talking here a little more from a IT services provider perspective, because we see that as an opportunity for ourselves. But it's not to say that that's the reason why I'm making that point, but it's bound to happen, because when you have a cycle like this, there will always be some level of inefficiencies which will lead to costs going a little off. And then because IT services providers are a little more disciplined, because they have a larger market, larger set of customers to support, you will always find them to be a little more disciplined on that front, and therefore that will give opportunities for them to take on more work from these MNCs. So that's one aspect I would want to call out from a trend going forward. And equally, I think while the trend, the preference, and particularly in, let's say if you take the non-BFSI GCC, there's a lot of heavy lifting engineering and technology work happening. The very core of those activities, many of these GCCs prefer to do it in-house, and because it has got strategic element, it has got IP, which is very, very important for them. So therefore, they prefer to do that in-house. But there is always opportunities for some of these areas where there are expertise available with identified Indian IT services providers, which they will continue to work with and outsource. So the model I see, particularly on transformation and those kind of works moving forward, there is always going to be a balance. And that balance, if it should be in that 70-30 range, or maybe it could be 65-35 in the short run. But I think it will stabilize in the 70-30 range. And so that's what will drive growth for the GCCs, and equally opportunities for the Indian IT services providers. So that's where I would like to stop, Maulik, and happy to take questions as we go along.
Venki, what you just said is within BFSI. Now, for us to distinguish between an outsourcing and the GCC, you're saying that within BFSI, there are activities which will still get outsourced from GCC to ITAS services.
Absolutely.
And you're saying a non-BFSI sector may largely be captive units, which they will continue to have most of the activity in source. Is that broadly the trend that you see?
No, I think sorry. Like in both areas, there will be some amount of work they will outsource, Maulik, be it BFSI GCCs or non-BFSI GCCs. Because there is a large amount of engineering talent available in India. If you were to take look at, let's say, non-BFSI work, and there's a lot of engineering R&D services companies, very technology intensive company. For example, the Mercedes, the Bosches, and all of those, and they have large presence here. They have very big presence here, and they do really cutting edge work for their global captives. So that will happen. But if you look at each of these companies, they have a number of Indian IT services providers they work with, and that outsourcing percentage varies, but it's easily 10 to 15%, which is why I said that number. It could go as high as 30-35% of all the work they do.
So GCC is an opportunity, not a threat as far as ITS is.
Yeah, it is an option. But another point I missed talking. See, also what will happen is there will be a number of GCCs which will be subscale. It will not be able to scale. They might be critical, important for these global MNCs, but it will not be scalable. And what happens is when it's not scalable, it will give you all those people issues, scalability, opportunities.
Yeah.
So again, opportunities for IT services providers to acquire them. So in the past also it has happened. If you look at it in the past, TCS has acquired cities, India units, and then multiple such GCCs were acquired. So similar opportunities will arise again, even in the future. So yes, to your point, it is not entirely a threat. There is a number of opportunities available.
Got it. Let me come to Jayesh. Jayesh, someone who has been, and I keep using this word, celebrity solicitor for BFSI sector. You have seen it. GCC for you is not new. I mean, there are many clients of yours who have actually implemented this. Share your experience, given that it is now widespread amongst non-BFSI sector as well. What are the structures, the legalities, the do's, the don'ts from your experience of GCC in BFSI? You're on a mute, Jayesh.
Yes, thank you. Thank you, Maulik, and thank you for having me, and good evening, everyone. And I'm glad, Prithvi and Venki spoke before me because they really laid the context very well. And I actually get an opportunity to build on some of the points they made. But as Venki himself mentioned and talked of Amex, so of course, how banking was taking the lead. And to me, banking, of course, was a lead, and then it spread into some of the other FSI part of it was in BFSI. So I'll refer to BFSI as a whole. 2-3 different trends happen around the same point of time, right? First, you had that BPO thing happening, and therefore, while that was GE as an engineering conglomerate doing it, I mean, obviously, when somebody does something successful and word spreads around and others start wondering, okay, can we also do this sort of? And cost cutting has been the name of the game in the Western world for the last 30, 40 years. I mean, the pressures only keep increasing. The pressures on cost cutting don't go down there, right? And quarterly earnings pressure and all of that. So it was but natural to spread to the banking and the BFS sector also. And GE, if you remember, had its own financial services captive also. And while in India, many of you may be surprised, but in US, GE used to be a big issuer of credit cards. And credit cards becomes a very natural, where you can start outsourcing some of the work to be done, and slowly then it morphs into from a BPO to next level and all of that. But that's one trend. The other trend was the IT body shopping and all of that. And again, that point comes, if you can do it in software, if Indians can be sent abroad to work on site for 6 months and all of that, and then they come back and continue working, cost arbitrage and efficiency and language not being a barrier, all of that. And again, that thought comes, why are we not replicating in the other areas? But last, but certainly not the least point out here was, the 90s slowly started seeing a lot of Indians getting into, from the BFSI sector, getting into regional roles. And some of them even went on to, have global roles, heading one of the American bank was headed by a person of Indian origin, Indian citizen rather. Another European bank was headed and all of that. So, and before they reached that place, there were a lot of others who were heading functional roles in the region or or globally. So again, that sort of started driving home the point, to the senior management in the Western world, like, okay, there is this talent pool, and how do we start accessing it? And it was one, of course, was the cost element, but it was not just a pure cost element. Otherwise, that would have been body shopping, but also from an efficiency, time zone, various other factors. So slowly these various trends sort of coalesced into and at least I can't say with certainty which one came first and which came second or whatever, but these are the key sort of three factors which, according to me, played a significant role. There were, of course, resistance and deterrence, those usual, oh, if we set up a GCC, are we creating a permanent establishment and tax headaches and all of that? And that itself created a huge sort of a barrier in the sense, not for the development of GCCs, but a barrier in the sense that many of the banks, when they set up these GCCs in India, they took great pains to have more than Chinese walls. They literally had, arm's length distance in the physical sense that the GCC centers would be far away from the banking branch presence, etc. And barring one or two, people like the legal head or the compliance head having oversight, etc. Nobody else from the Indian operations of these BFIs would have any involvement in how the GCCs in India were being run or manned, etc. One was, of course, the key concern was to avoid any tax complications. But what started as a small thing slowly stepped expanding to the point that more than a decade back, more than one client would tell us, okay, they're visiting India, but they're not really coming to look at the Indian operations. They're coming to just see what the GC is doing and something happening in the GC is the next level of the board meeting or what have you. And that it happened so sort of silently that suddenly one day I come to know that okay, one of the banks has 10,000 plus employees in this GCC in India, which whereas the Indian employees of or that the foreign bank obviously all put together would not even be 1,000. So you suddenly see this huge multiple out there, and I mean, of course, as they grew up, there were issues being faced, and I'll come up to some of those issues as to what the next level of GCC we're talking about, because some of these issues are going to play out again and maybe in a bigger manner. So I won't dwell into that. So one was therefore this genesis of the BFSI and this, in a way you could call it a BPO, but I think you're doing an injustice if we equate the GCCs to a BPOs because it's as I think Prithvi made this point and Venki also made this point. We're talking of far more skilled people out here, who are really getting employed and getting engaged. But 2-3 points to make before I move on to a different point here. And let me give an analogy. I remember in the early days, the investment banking firms talking about, oh, they have a PPT to make. Okay, they will dictate the points and send it back into India, and then the people in India will just convert that into a PPT. Slowly, it came about. Okay, there are these 4 things I want research to be done. Can you guys in India do the research and put together something which I can then convert into a meaningful presentation? And of course, it will come back into India for the actual presentation to be made. To where, at least in the investment banking world, I know this, and also in the corporate banking world to some extent, where some of the ideation is being originated here. It's no longer a back office silent worker sort of thing. The people sitting here are doing some of the ideation, some of the analysis, and a classic aspect of this would be risk management, where you were originally providing some data inputs, then they would send you some stuff and you will do some assessment of it, or you will run some process on it and come up with some analysis and all of that, to the point where a serious part of the risk management itself is based here. It's not reached to the final level, of course, and I think again tax, and I'll come to that a little later, is coming in the way of some of the natural potential being really achieved. But I'll sidestep that for the time being. But the point here is that we have evolved, at least in the BFSI space, the type of work being done here by the GCCs, and all of these are obviously captives, right? For operations around the world. Originally, it was only for, say, US, and slowly became Europe, and slowly it has become almost rest of the world, etc. To the extent that in some cases, almost everything is getting done in India, in the sense there is no other GCC they have outside of India. So when I'm saying almost everything, I meant from a geographical perspective, India is the service center for the whole world and not just for a particular geography. And I think again, Prithvi made this point of wave 1, 2, and 3 and 4, and we are still to go to wave 5 or 6. And I think some GCCs may have gone to wave 5, but what is holding them back? So I'll just pause here and check my notes if I've covered what I wanted to. Yeah. So the next wave, sorry, Maulik, you're saying something?
No, I just want to cover, I want you to cover even the international practice. I'm sure India is not the only country which has been,
Yes.
We have seen this GCC growth. What's really the international? And that's really one of the questions which is being asked by, and if I read it correctly, we are talking about India. What about GCC globally, other than India?
Right.
Atul Garg is writing, the growth, presence, employees, revenue. If you can share that international practice.
So I won't be able to address the latter part of that about the numbers and all of that, but what I can give an analogy is look at Singapore. I still remember, and again sticking to BFSI because which is what I'm so familiar with, about 25 years back when I would do my international marketing trips, it was mostly Hong Kong. Singapore was like didn't really matter when I started doing the marketing trips. Right? Then there came a point that Singapore started coming up, but I used to really wonder, how serious are these guys that they think they can compete with Hong Kong? Because Hong Kong was sort of at that point of the Asia Pacific hub for BFSI, right? And that's where people were sitting there and covering the whole region. Slowly, it became a point of time where I had to split my time equally between Hong Kong and Singapore. And now we've come to a stage where it's the other way around. If I do 4 trips to Singapore in a year, 1 trip to Hong Kong is more than enough, sort of. That's to give the shift which has happened. Now, why am I telling you in the context of GCCs? Because, and this is true not just for BFSI. I know anecdotally that a lot of MNCs are running the APAC operations now from Singapore. So when you talk of running the APAC operations, it's not just the senior management which is sitting there. They also have set up captives there from what we would call GCC in that context, right? And that same thing happened in BFSI. So imagine the legal team in Singapore overseeing the work of the banks or the insurance company or what have you in 20, 30 or 40 jurisdictions in Asia Pacific. And we're not talking of the whole world, right? So the amount of employment that creates now, in some of these entities there in Singapore, they're not warehoused in a Singapore branch. There's a separate legal entity, which with the GCC equivalent, so to speak, which is doing this work, on a transfer pricing basis for all the countries in the region. Now, so it's not that India couldn't have done it, but and I come to the point there for tax policies, but to complete the Singapore point, from around the turn of the century in 2000, Singapore was, just beginning to step up on BFSI, but didn't really matter so much from a regional perspective. To the point now where it is the jurisdiction as far as the region is concerned. While we'll talk of UAE and all of that, it's really Singapore where the action is, and BFSI in the wider sense, including crypto and what have you. Right. So if you have to emulate someone, it is a Singapore. And what did they get right, which therefore will be a neat bridge to my next point, which what can go wrong, right? They really got the taxation right. They really got the legal regime right? So one is, getting that comfort that if I'm going to set up something in Singapore, that will not run the risk of it being treated as a P for my global operations or my US operations or whatever. And those profits being sought to be taxed here and etc. So then when they talk of their advanced pricing arrangements, etc., it really works very smoothly. I'm not saying APAs don't work in India, but if you talk to any of the tax practitioners, and I'm not really a tax practitioner, they will still tell you the time it takes and the struggle it takes to put an APA in place. Right. So we are beginning there, we are beginning this part, but we are still a long way to go before we get it completely right. The other thing which Singapore did, and which even to some extent Dubai has done, which when you talk of and I'm sticking again to BFSI, sorry, Dubai has this Dubai International Financial Center, and they set up a Dubai International Court where super majority of the judges are not of UAE citizens of origin. They've been brought in from around the world because they said, look, if we want to give people around the world comfort, enforcement of contract, recognition of common law, whatever, then let's get the best judges. Singapore did the same thing about a decade back. They set up Singapore International Commercial Court, right? Which is again, we will adjudicate disputes which have nothing to do with Singapore, but international trade disputes, commercial contracts, or whatever. And again, they did the same thing. They imported judges from around the world, including a retired judge of Delhi High Court, to give comfort to the people like, look, we want best in the world to be doing this. Now, can India do that? Of course it can. Whether we will do that is a different matter because, we may allow to think that we have the best talent and all that. So that will include the best judiciary and all of that. But that's not how the world sees us. And that's not what Singapore or Dubai did to give comfort. Look, we will give you the best in the world for you to really treat Dubai as a jurisdiction or Singapore as a jurisdiction, including from a dispute mechanism perspective. So I'll just digress for like 10 seconds. 30% of the arbitrations which are run by SIAC, Singapore International Arbitration Center, are connected with India in some manner or the other. I mean, that's the level they have reached to because they have given that comfort to the world. We are efficient and we are consistent. That's two things. If you and it goes to a branding aspect of it, which I'll come to in a minute. But so if I now go on to what are the hurdles to reach the next levels, right? And I'll run to the big picture before I get into detailing. Okay.
And as you get into the hurdles, here is a question from Chaitali. I think again a related one. Would be good to understand the challenges encountered and issues to watch out while setting up GCC in India. And I guess that's what you plan to cover as well.
Yes, thank you.
Dr. Abhay, I'll just come to you after this. Give me a few more minutes, and I know you've been patiently waiting for. Yeah, Jayesh, please go ahead.
Yeah. So one I mentioned about tax, right? The big sort of boogie is that permanent establishment concerns. If we set up a GCC here, which goes to the ultimate level, that decision making is being done from here, right?
Yes.
And it's like, let me give a very weird analogy. One of the sports shoes many of us wear or used to wear in our college days or whatever, American brand, iconic. What are they really doing? They're just designing the shoes there. Everything else is outsourced. Procurement is outsourced. Manufacturing is outsourced. Marketing is also outsourced. But the branding is controlled. The design and branding is controlled in US. Or you take the classic example, you buy $100 shirt, cotton will cost you $1. Manufacturing may cost you $2 or $5, and shipping and everything else will cost you another $2 or $5, whatever. The rest is the designing and the branding, right? Now, in the Indian context, I'll come to the branding aspect, but the concern here is if we are seen as making the decisions in India for many of these elements which I talked about, will our global profits be attributed to a PE in India and get taxed? So now I know the government can easily announce, okay, we will change the law and all of that. And let me give you an analogy which I experienced today. I was doing a meeting with a client, and we were talking of their business model and said, look, and this is a client which is into a business segment where they will buy an asset offshore, then lease it to their Indian entity, and which the Indian entity will then deploy the asset on a charter basis or a lease basis with various Indian operators, etc. And I told them, why don't you now, instead of having these offshore vehicles come to GIFT City? They said, it's all this is good to say, but who's going to protect me from getting this assessment notices from the IT department? But I said the law is very clear, and they said yes, the law may be very clear, but our experience and even some of the other businesses which have moved into GIFT City, experience is saying that people are still getting these notices and assessment orders which don't dovetail into what the government wants to happen, which don't dovetail into what the government is saying. This is what the regime tax treatment is going to be like. So therefore, not only from an announcement perspective, as you asked Venki, that the man on the ground, right? That way, similarly, the GCCs on the ground, what is the experience going to be as regards tax treatment? Are they really getting the same, seamless treatment which they have used to in, say, Singapore on safe harbor arrangements, SHAs, or APAs, and so on, all of that. That is one key thing. Then legal issues, and let me split this into two distinct part of legal issues. And Venki again mentioned about the strategic element and IP rights. So what matters there is employment contracts and our regime on intellectual property rights, etc. And if you remember, some months back there was this controversy when some of the IT majors found out quite a few employees are moonlighting, and some of them are having 3 and 4 parallel jobs. And we actually, if you look at the social media messaging on it, many of them said, so what's wrong with that? That just doesn't work. If you're really wanting to move your GCC to the next level, and if you're saying, oh, it's okay to moonlight and whatnot, not happening. Because that's, for them, it really matters that, when I'm hiring someone, he's fully 100% dedicated to me, nothing else, right? And the corollary to that was this employment contracts and non-compete. Now, when I'm talking of non-compete, what I mean is, I'm not talking of non-compete as if you work for one GCC, you cannot move to another GCC. What I'm talking about non-compete is that you work for this GCC, and this applies equally to IT services also, by the way. It is not unique to GCCs. Then you will not go up and set shop on your own, or when you join somebody else, you come and compete against me directly with my own business, so to speak. Now, and that matters because, see, when I'm putting you into strategic roles, when I'm making you a decision maker, I'm sharing everything about me. My entire DNA is being shared with you now, right? So that is a lot of sensitive stuff. And if the comfort is not going to be there, look, tomorrow any breach of employment contract or covenant, etc., may not be enforceable in India, then why would I want to deploy that in India? Why would I want to deploy my strategic decision making in India? Why would I want to share my innermost core with people in India if I'm not getting comfort that will be protected and recognized? So that's the key thing. Now, one other element of legal regime is there, which I'll come to that in a minute. But I want to speak about branding, and I gave the Nike analogy, sort of the shoe brand. But from an SCPC perspective, I believe we can definitely go about around the world showcasing what we have already achieved in the GCC model. But here's the thing. Many of the GCs which are coming are bigger players, people who can afford to set up 100, 300, 400 captive easily because that's how big they are and whatever. I suspect we soon hit a wall as regards those big names. But where the other action can lie, if you look at a bell curve, what we call the tails, but some of the bell curves, the tails are like, 40, 50% or maybe more, almost 60%. The actual bell is only 30, 40%. So a lot of smaller players, but in the aggregate, being the larger part of the industry, that is where the action can shift to. But many of them will therefore in the beginning not want to come on their own. So what is it they will follow? They will follow to some extent, as Venki again said, outsourcing to the IT players. Then they will say, okay, we have tested the waters, this is good and all of that. Let's set up a third party captive, which is like, you're asking again an IT player or somebody to set up a captive for you. So all the employees in that organization are working for you, but you're not owning that organization. You're not managing the organization. A so-called agent, in a way, if you want to, for lack of a better term, is doing it for you. Yeah. Okay. The third option, of course, is the joint venture, which you may join hands with the IT company or somebody and say, okay, let's set up this GCC for us. And down the line, we'll buy you out because India is a new country. We don't know anything about India, geography, legal regime, the whole everything. So that's why we want to test the water slowly and all of that. And the fourth, of course, is the current GCC model, which is 100% captive from day one. Sure. So the smaller ones, these three will matter. And that is where, again, the legal point I was making. I'm setting up any of these three models, especially the model 2 and 3, third-party captive or a joint venture. Then when it comes for the time to buy me out and make it 100% captive, and I've already agreed upon, say, 3 years or 5 years or 10 years like down the line, like a BOT model, right? Build, operate, transfer. I've already agreed for the pricing or the valuation. But when it comes for the time of that, suddenly the Indian partner may say, sorry, I want more. Now, will the courts in India enforce those agreements, or they say, oh, sorry, this was a forward contract, put options not enforceable, or whatever? So all of these issues can crop up. So therefore, we have a fair amount of other work to do in realizing the full potential. I'd like to touch upon one sector which we haven't spoken about, which is nothing to BFSI and health services. And I'm not talking of these, medical transcription services or whatever. No, on the contrary. I'm talking of actually, medical tourism. Now, to some extent, it's happening, etc. But imagine if tomorrow people from US and UK were to come to India in an organized manner, and insurance company plays such a big role out there, right? And the BFSI element, so to speak. Now, this may not sound like a GCC, but imagine, the players in the UK, USA setting up captives out here, where because of the medical pool out here, etc., and the insurance companies could be the drivers of this, that they find it far cheaper to treat patients in India, the flight and the stay and cost all put together. And I'm saying this anecdotally because more than one NRI friend of mine has mentioned to me, especially the ones in UKs, oh, we will be coming to India soon because the dental treatment, and even in a place like Mumbai, flight costs and everything put together is still cheaper than what they have to pay in UK.
Yes.
So
yes,
this is something may not fit into your conventional sense of GCCs that way, but just a food for thought. But I'll stop here, Maulik. I think I've exceeded my time. Sorry.
Well, But I think one key thing that I just picked up, and which was a very reality check when Prithvi talked about the reality. And I think some of the points that you mentioned, probably questions, or rather, we need to do a lot more work to really be reliable when it comes to contractual obligations or the legal piece or the dispute resolution. But a very, very interesting reality check. Thank you so much for contributing. Let me now look at Dr. Abhay. Dr. Abhay, you have a greater role to play when it comes to promoting the service exports.
Best sir, Vijay in another meeting with government actually right now. They have not two meetings, so they are on a second meeting.
Okay, will he be there after some time?
So I don't know confirm because they are meetings.
Okay, no worries. In case if he comes in, just open up the video so that we will know and then
Sure, sure.
look
Sure.
in. Yeah. So now let me come to Prithvi. Prithvi, one is the factor that you talked about earlier, the reliability, the trust, and here is the reality check. And I'm just going to open up debate internally between three of you. How are you seeing it, that shaping up? And I know you're not the legal man. But some of the points that he talked about, are you seeing that as really the real challenges? And maybe Venki, even for you as well. Are these real challenges, or this is more of a ghost town where there is no ghost, but actually you are just expecting it? What's your take on that? Any one of you can pick up.
If I can take it more from a number perspective, right? I mean, I know I don't have the operational experience or the legal expertise, but just the fact that we are evolving and moving up the value curve tells you that the headquarters finds the GCC in India or operations in India reliable, capable, etc. And I mean, the numbers tell you that they do trust us a lot more than they did a decade ago, right? I mean, that's the way I would put it. But I fully agree that with what Jayesh was mentioning, the bell curve, right? I mean, there's massive potential for an MSME or an SME based out of these Western countries to, if they can very easily come into India and set up something, something really small, and if they don't face any tax or any regulatory hurdles, I think that could be a big game changer, right? So I mean, my sense is that definitely worth looking at how we can streamline the process and make it far more easier to set up shop. So it would sort of be like how China did it, right? For anybody who's a small MSME, SME could have their goods manufactured out of China and sent here. You don't really need to be a very large player to go and set up a manufacturing unit or to source from there. So similarly, a small MSME should be able to source services from India, right? The same analogy should be possible, and I think if we can make that a lot more streamlined, it's only going to make us a lot more a lot more attractive, right?
Yeah, Venki.
Yeah. So I think some of the points Jayesh raised are valid. I think particularly tax and tax related challenges some of these MNCs or GCCs face in India is not insignificant. I think the good part is that the government is also trying to do multiple things. For example, these faceless assessments are, let's say, some steps over there. But I think the transfer pricing is one of the most litigated areas in tax, right? If you were to look at in terms of corporate. So there are challenges, but I think it is evolving. And I think some of these GCCs who are setting up shop in India also have a wealth of experience from the larger ones who have set up shop and worked in India for such a long time. So they have a good set of good knowledge base. And I think equally the ecosystem of all the tax consultants and others who have been around, they also understand this fairly well, and therefore they kind of give the right kind of advice. But there are still challenges. For example, even the recent one, right? If you look at the issue around the expats PF and the recent High Court judgment. So those are irritants which can create challenges for companies. But as Prithvi mentioned, and given the sheer opportunity which is there in terms of the kind of strategic impact these kind of GCCs can make, I think companies will always find ways of working through, unless it has become a very, very large limiting factor. I think these are definitely irritants, I would call it, if it were, but things which can be worked around, and some early signs of the government and the different departments looking at it to see how they can help companies set up shop more easily and handle and manage these issues better, is what I would say. And just I will also briefly touch upon some of the questions which have got raised, Maulik. I think Jayesh touched upon the challenges. I think one thing which GCC is setting in India, which I think one of the questions was to also see what is the right scale. If you see, the problem is while it works very well when it's at a certain scale, if it is not so large, then you need to look at those option 1, 2 kind of things which Jayesh called out, right? I think those are more efficient for companies to look at, because it is not as big a step to set up shop in India, because we're going to do a 30, 40 or a sub 100, sub 200 kind of a center in India. It will come with a lot of additional effort and cost for these companies to set up and manage it on an ongoing basis. So therefore, for the smaller ones, they should look at other options before they consider setting up a 100% event. And the first question around outside of India, I think outside of India, there are GCCs, no question about it. For example, Dublin is a very large BFS focused you will find a number of large banks who have set up shops over there. They have their own centers and they do a lot of good work over there. Or there are a number of Eastern European centers like Poland or Bulgaria, where companies have set up shop over there for very specific reasons. But again, see, you need to recognize one thing: the difference between what happens in India and some of these East European or even LATAM. For example, if you go to Mexico or Colombia, you will find a number of centers. But they're all very language specific and very certain areas in what some of these them address. India is the one which kind of gives a breadth of multiple technology areas where companies can access talent and also get scale and set up shop fairly quickly and also do strategic work. So that's why the discussion is largely on India, because that's where the volume is, that's where the scale is. It's not there's other areas don't have, but again, very specialized and focused on what those needs are.
And Venki, what could be the other challenges? For example, we all talked about the talents, the engineering skill sets. Are this adequate when we talk about a kind of growth that Prithvi talked about? Is there really a, are we hitting the wall, or we have enough and more? What's your sense?
See, I think if you look at the opportunity, I think if the growth happens on the lines, and it can happen in the lines which we projected in the, let's say for the GCCs going up at from 40 billion to 80 billion or more, I think one thing which the Indian IT services providers have been struggling with, and they've been trying to solve on their own way in multiple different ways, is the fresh engineering talent which they hire in large numbers from engineering campuses, train them and then deploy them on their projects. So at a point in time when GCCs look to broaden their pyramid, they will need to hire a reasonable number of folks from these engineering campuses. Now, if you start hiring large numbers from these engineering campuses, you will also have to go through the same learning curve the larger IT services companies have gone through in terms of hiring them, training them, and then deploying them on areas you would want to do. And see what happens, Maulik, there is, I think it also the kind of work which these companies are moving to India, right? If it involves a lot of technology work, which is volume driven, which needs a large number of people to be working on them, then this model is amenable. But if you're looking to do very niche, very specific kind of work, then you are definitely going to compete with the same amount of limited talent available with. So you're going to compete with the Indian IT services providers and other large global captives to attract the same talent. So to that extent, there will be challenge. But I think the fact that there is such a large pool available, and I think all these software engineers are reasonably smart people. When they see opportunities, they quickly find ways of getting cross-trained, identify what they can do, and then the talent pool expands. So to that extent, it does provide an opportunity as well. But there are challenges. If they are looking, if some of these GCCs look to scale and go to the scale in terms of the larger IT service providers, it's a non-trivial problem. It will need serious effort to make that work.
Just one observation, generally this has been the trend that we all of us would have observed over a period of time. The engineering talent is generally migrated. Are we now, with all this GCC evolution, looking at the reverse migration? Or is it already happening?
That period is over, Maulik. If you look at with the visa regimes restriction which has happened across the world, it is not that easy anymore. I think there is a specific kind of talent which immigrates out of India. For example, the folks who are in the IITs or in the top tier institutes of the country who are looking to do very specific kind of work who kind of migrate. But now with this opportunity, where the way the IT services industry has created opportunities for many of these people, many of them can go abroad, work for a few years, come back. So they don't see all their objective of going abroad, making some money, coming back is met. So it is not that they need to migrate and do it, but yes, there is the sheer demand for H-1B visas and green cards. If you see and the number of Indians waiting to get those, tells you that there is still a aspirational need for many people to go and be part of the country setup. But I think, to my mind, it is not as stark as it used to be earlier. It is becoming better because there are opportunities and enough opportunities in India where people see that they can make as much money and live more comfortably, because there are all the good things about living in these Western countries. You have to do a lot of things yourself, right? You might feel good about it, but in India, you can spend a little bit of money and have a lot of people doing that for you.
Yeah, got it.
If I can drop in a question. See, I think maybe a question directed at Jayesh, and even Venki can probably help there as well. We spoke about, how maybe smaller MSMEs, etc., can sort of talent access services out of India. Is it possible to do? Are there any restrictions for some of these flex jobs? Because post this COVID and work from home and hybrid and those sort of setup, you do see a lot of opportunities which are fully offshore, right? Is it possible for some of these guys to access Indian services through that? I mean, are there restrictions to do that? And do you see free trade agreements sort of being discussing some of these aspects as well to make it far more easier to access talent out of here?
Okay, thank you for that. And in fact, you actually created a bridge for me to make two other points. Thank you, Prithvi, for raising that. So, strictly speaking, there is no legal bar, even once the new labor code comes into place, which is supposed to repeal so many of the antiquated labor welfare legislations, all of that. There is no bar really on having flexi arrangements, because we're really talking of higher level employees, right? We're not talking of blue collar at all. We're talking of white collar, and that too far evolved employees. And even when you start taking in engineering college graduates and all of that, starting levels will be quite high. So I don't see a problem there per se. But one of the aspects you mentioned, work from home, and this is a point I wanted to make earlier. When I was seeing the statistics being presented by you, that from the COVID time onwards, I started seeing a spike in India, and it made me wonder to what extent did work from home in US and all of that accelerated more GCCs getting set up in India, because then they realized that if our own employees work well from home, then whatever resistance they may have had earlier to GCs in a remote country or whatever may have further been demolished as a result. But then the counter trend made me wonder that now a lot of the companies in US are starting to threaten and whatnot, not just in India, come back at least 3 days a week, otherwise whatever, right? So when that trend accelerates, are we going to see a slowdown in the GCCs? I don't think so, but it's something worth keeping in mind and not taking the eye off therefore what is happening there. The other point, when you talked about these flexi jobs, and one thing I would like to talk about is on the legal accountancy side, 2 points there. One, and you mentioned free trade agreements, right? And that again creates the other bridge for me. What I have heard, and I could be wrong on this, the Indo-UK FTA, one key sticking point has been that the UK government is very clear that we will sign this only when India opens up legal services. And we had some announcement, and then we had some backtracking by the Bar Council and all of that. So whenever that really happens, it will happen. But and similarly, there have been in the announcement in the past on the accountancy side. And my point here is, see, while the Big Four and the Big Ten are present here, and to some extent they are already doing cross-border work and all of that. I think I would suspect, if not 50%, at least 30-40% of the employees the Big Four have in India are not really doing India-focused work. But imagine if fully accountancy were to be opened up. Imagine if fully legal services were to be opened up. So all the global firms come into India, set up shop, where they are hiring people, qualified accountants, qualified lawyers, and what have you, to do completely non-Indian work. And anecdotally, I know for a fact some of the large Indian law firms for some of the large global clients are already doing work which has nothing to do with India. But because you are so good at doing, say, M&A or whatever else work, for the Indian transactions, and the cost arbitrage between a lawyer in India and a counterpart in Singapore, leave alone in London or New York, is significant. So
Yeah.
that is already happening, but that's really at the margins, right? So you really want to mainstream that. And there, IFSCA has come out with a very interesting discussion paper on what they call BATF, bookkeeping, accounting, taxation, and financial control compliance services. Now, so again, that means it's matter of time before in GIFT City you're allowed to do all of this, including therefore, accounting services, right? And so if you were to fully open up, and I wouldn't be surprised if the free trade agreements may be the channel the government uses to open up accountancy and legal services, because it always bothered me that what is so unique about these two services, and I'm a lawyer saying that you're allowed FDI and almost all the other services,
Yeah.
but not these two services. So what is so
I mean,
sacrosanct about
is it about the concern that a UK or a US solicitor comes here and is able to arbitrate in Indian courts? Is that
Not
the sticky
really.
point? Is that the
No,
sticky
in fact, that even the global legal fraternity is very clear. We don't want to come and argue before the Indian courts, and even Singapore or some of the other countries which are opened up to foreign participation, they have restricted access to appearance before the courts. But arbitration, by all means, and that's one reason again that earlier data is shared. 30% of arbitrations, manned by SEAC is Indian connected,
Yeah.
because they have no bar on who comes into an arbitration hearing in Singapore and does what. But appearing before court, that's a different matter, and that has not been any way demand that allow us to appear before Indian court. So that, and of course, it continues to serve the interests of certain very small group to keep things the way they are. But if you look at it from an employment perspective, if you look at it from skill sets perspective, if you look at from the sheer, value that India will end up doing from earning capacity perspective, allowing in the accountancy side and legal sides, GCCs to be set up, I think is a no-brainer.
Venki, you want to take up the third question from an HR who says, what role do startup play in solving the problems and overcoming the challenges related to IT service and GCC?
Yeah. See, I think what at least I can, if I were to maybe first look at it from a IT services perspective, I think IT services companies, what they've been doing, at least the trend picked up a little more during the COVID time, and many of these larger IT services companies also set up their own investing arms, and they started looking at startups doing work in very specific areas which can be complementary to what they're looking to take to the market. So I think what many of these larger services companies did was to for them to do it organically in-house, do those kind of innovations was taking longer. So they did identify startups which were doing work which is such that which is of interest to their customers, or which they can take to bundle as part of the larger offering, take to their customers. So they identified some of these startups and invested in them. And then some of these startups were able to take their offerings on a joint go-to-market with these customers, or in some cases, they were even acquired by these larger providers. So far as GCCs are concerned, I am not, at least anecdotally, I have not heard or seen too many of those instances happening. But some of these GCCs, what they do is, again, they've also started working with the local startups and investing in some of them or providing them seed funds in certain identified areas. So they kind of encourage these startups in certain areas based on their own specific areas of interest. It's not necessary that in each of those cases, those startups will end up doing work for those GCCs. It could be just the financial capital and other technology and related mentoring or related support they might get, but not necessarily that in every such instance, they would end up working with that startup itself. But there are a bunch of GCCs who are also doing that in India. So yeah, so that's the way I see it. It may not be exactly a point solution, which is kind of helping them to take to their customers.
Yeah. And Prithvi, I just want to take your last inputs on, you talked about multiplier effect. You also talked about the GCC being open up in tier 2, tier 3, tier 4 cities. How do you really see the whole thing, shaping India in terms of the economic momentum, fueling the economy, the multiplier effect that you talked about?
Yeah, I mean, see, I mean, we are very hopeful. Obviously, it makes a lot of sense to do this, to spread the urbanization, so to speak, right, and spread activity, spread GDP. But then it, brings back focus into things like basic things like, investing in those tier two, tier three cities, right? I'm sure. You will see far much higher demand for public transportation, for reliability in electricity, sewage, treatment, and all of those things will sort of come into play, right? The private sector aspect will get attracted. More schools, more hospitals, more malls, more retail activity will sort of happen because markets will sort of gravitate towards where the spending power is, right? But when it comes to public services, I mean, my only concern is, I mean, will that become a limiting factor, right? I mean, so that's the concern. But yeah, I mean, definitely there's a lot more to be hopeful for if some of these GCC activities move deeper into India. The anecdotes that we hear about tier two, tier three cities where they're taking tuition for people based out of the West. That was actually the idea behind my question about can individuals sort of directly have contact with smaller providers, right? So direct thing there. I mean, is there any tax or any other regulation that's stopping it? I mean, if that takes place, then I'm 100% sure that I mean, we're not going to rely only on agriculture and then manufacturing. There is export, and we are talking about services export, right, as a big driver.
Yeah, yeah.
The big limiting factor, I mean, the concern for me is really the public services, whether that can keep up and match up to the pace and the demand from in the small cities.
Just briefly on that point, Prithvi raised, Maulik, I think particularly there is, at least in the IT services business, I think there's a number of these gig platforms which are available now. So a lot of these gig platforms allow individuals sitting in India to do work wherever in the world. So you can offer your services, and these platforms will, there are people who will pick up and then offer you that job. But then the other points you make are still needs, I think, will evolve and become more finer in terms of taxation and how those things are taxed. But most often these come through the normal banking channel, so it's very difficult to avoid them not being spotted by the relevant regulators. So, but that is happening as we speak. So it's not that it is not happening. Maybe the scale at which it is happening is not large, but definitely a lot of IT services companies even today leverage these gig platforms where they take people from India or even take people from outside of India for very, very specific work.
Yeah.
So, but I mean, just to add here,
point,
if I can just jump in there, Venki, I mean, when I've looked through these websites, right, a majority of these work from anywhere jobs are from North America, and they sort of have a qualifying thing that yes, you can work from anywhere, but you have to be within North America, right? I want to see when that transition or shift will be like work from anywhere is actually work from anywhere, right? And is there anything legally or from a taxation perspective that's stopping these guys from sort of accessing the global talent pool?
No, interestingly, you will be surprised. I think when the Ukraine war happened, the number of people from Ukraine available for work for IT services companies remotely was suddenly massive. Because suddenly they don't have opportunity, but they're all available to work remote. So there are opportunities, but you're right. I think there will always be those things to work around, but I think it will evolve, just a matter of time.
The latest print, and Prithvi can relate with this, the latest print on the inflation number from US talked about 0.6, 0.7, but you deep dive and they say service inflation, which is about 5%. Now, the question really is, with whatever is happening for years, last maybe 2 decades, China solved the problem of inflation on the manufacturing side. Can really India solve the problem on the service inflation side? Yeah, possibly, you never know. And the way things
we are ready. We are ready. I'm hoping that there are no other constraints, right? I mean,
yeah, exactly. So I'm going to quickly sum up. I think we're just about to end, and it was a very, very enriching conversation. We started with the service exports growth. Can it really address, or can it really create a roadmap to current account surplus? Answer is yes, huge potential. There are a lot of things within service exports. You talk about GCC, and in GCC, I think while on one hand we talked about the opportunity, the great potential that it has, but Jayesh rightly mentioned the realities on the ground, some of the legal dispute, the employee engagement contract. I think there are text related issues as well, which needs to be fixed for enabling the growth. I think one perspective which we missed in the entire conversation is from a service export promotion council, and I acknowledge their presence because they really supported, they partnered with us in this entire initiative. I missed Dr. Abhay's inputs on this. And I think Venki, from a sector perspective, you really had a very, very valid input in terms of how this entire things, be it opportunity or a threat, ITS versus also the GCC. I mean, it was really a package full of very, very rich conversation. Truly appreciate your contribution. Anyone wants to make a last final comment before we end the session?
I think nothing from my side, Maulik. You have summarized it very well. Thank you.
Jayesh, Prithvi.
Maulik, thank you for this opportunity. Glad to have been part of this.
Nothing from my side. I'm very happy for the enriching conversation.
Superb. Thank you so much. And thanks all the participants who have still stayed there. We kept chatting and you all are still there. And thank you so much for your patience and your listening. We truly appreciate it. Thank you all. See you next time.
Thank you.
Thank you. Good evening.
Bye-bye. Good evening.